Hi class, we're going to get ready to do another problem where I'm demonstrating the homework assignments for chapter 1. And if you'll bear with me just a minute, I'm going to share my screen with you and tell you a little bit more about what we're doing. Today, what I want to do with you is to do something that I don't normally do, but I feel like there'll be a lot of questions about how to handle this particular problem. So I'm going to look at one of your homework assignments with you, and I'm going to show you exactly how I want this completed. The problem that I'm going to work with you is 1-05A. And you will have to do 1-04A, as well as you'll have to enter in the information for 1-05A. But I wanted to show you how to do it because it didn't really have a real good example for problem 15B like I normally do. I realized that the problems that I do sometimes through the videos are not exactly set up like your homework assignments. For the most part, I think that you could probably do without that, without me discussing a whole lot about that. However, with this one, I just want to make sure you understand what you're doing because it is a little bit difficult to be looking at. Also, I want to review with you, I'm sure that you're catching on by now, but most of my Cengage assignments have at least 2 problems to them. And when you do the first problem and complete it, make sure you click on the second problem so that you can complete the second problem too. It's a part of your overall assignments. So usually I have at least 2 problems associated with each assignment. So another reason I wanted to show you this one is because a lot of times students don't know what to do with this part of Cengage right here. And what I would suggest that you do, and I'm going to move myself out of the way so you can see the entire screen here. What I suggest that you do with this is that you click on each one of these tabs. This is just a suggestion, but if you click on each one of these tabs, you can see it's building all the tabs for you here. And what I like to do is I like to look at the view one thing at a time. So I'm going to go all the way over here to this button and I'm going to click on this to show you how you can still see each one of these items. And what it does is it just puts them down the page. So it starts with the instructions, then it gives you the labels and descriptions, and the starting question and the accounting equation grid and all the things that you need to be able to solve the problem. So again, what I did is I just clicked on each one of these to make sure that the background becomes dark and the wording becomes light. And then I clicked on this last button right here. Now you could click on this button if you prefer, or this one here. It doesn't matter to me. I just have a preference where I like to see it going straight down the page. And so that's what I've done. I've opened up each one of these so we can see them because you're going to need those. Also, in this problem, it's very lengthy. So I'm going to tell you right up front, it's going to take a while to get through this one. So bear with me as we go. Always read your instructions first. This is Delight Dry Cleaners, and it's owned and operated by Joel Polk. A building and equipment are currently being rented pending expansion to the new facility. So the actual work of the dry cleaning is done by another company for a fee. The assets and the liabilities in the business on July 1st, 2019 are as follows. What's different about this problem is this part right here. They're giving you beginning balances that you'll need to start with. And in addition to that, they tried to make it a little bit difficult for you. And they ask you in the first requirements there's a starting question here where they want you to determine the amount of Joe Polk's capital as of July 1st of the current year. So I'm going to show you how to do that. We're going to come back to this in just a minute. But before you do anything else, this is the way I would suggest that you start this. Since we have cash at $45,000, I would go ahead and enter the cash balance in the spreadsheet that they have available for you. So I'm going to go underneath cash and I'm going to enter 45,000. This is a starting balance for this company, and that's the cash amount that you're going to be starting with. And that came from last period's ending amount that was just brought forward. See, it could have been from July or June 30th, 2019. The cash amount brought forward at $45,000. The accounts receivable is $93,000. So I'm going to put in $93,000. And then the supplies is $7,000. And you might have noticed they've added a new asset here called land. Land is something of value that the business owns. Still matches the definition of an asset. So the land is going to have a value associated with it at $75,000. And that was the purchase price of this land. We also have brought forward accounts payable at $40,000. So I'm simply just recording the beginning amounts for these accounts that they gave us. Well, if you looked at this and you added up all your asset accounts, the total of the assets does not equal the liabilities plus the owner's equity. So what they're asking you to do in part one is to find the amount of the capital balance that was the owner's capital balance as of the previous period that is being brought forward into this period. And the way that you can do that is just simply to add each one of the assets together and subtract the accounts payable, and that will leave you with the capital balance that you have to start with. So I'm going to pull up a calculator. And I'm going to put it down here to the bottom. I'm going to move this around a little bit where we can all see what we're doing here. I'm going to add my assets. Cash, accounts receivable is an asset. Supplies is a prepaid expense, and all prepaid expenses are assets to start with. Land is an asset account. And then what I'm going to do is I'm going to subtract from this total the liabilities, which is $40,000. And what that's going to leave me with is $180,000, which is the beginning capital for Joel Polk capital. So let me check my work, just make sure my math is correct here. Don't want to start us out wrong. And you see my math is okay. And again, what I did is I took $45,000 in cash. I added it to my accounts receivable, $93,000. I added my supplies in, then I added the land. In other words, I totaled my assets, and then I subtracted my accounts payable, and that left me with the balance that we had to start with for our capital account. So the starting question asks you to determine the amount of the capital as of July 1st. That's what we just did, and this amount would be $180,000. It's just easier if you started out in the accounting equation itself, write down everything they gave you as beginning balances, add up all your assets to total them, subtract the total of your liabilities, and that will leave you with the owner's equity. So technically, the accounting equation can be restated as assets minus liabilities equal owner's equity. But if you've learned it as assets equal liabilities plus owner's equity, that works too. Either way is fine with me as long as you know at least one form of the accounting equation. Now I'm going to click on this little chevron here to get rid of some of this. And again, my face is in the way here. And I'm going to move my calculator over a little bit. Oh, it's a little bit too far. Let me get to where I can get to my scroll bar easily. And then what we will do is we'll start by analyzing the transactions. These are some of the same types of transactions that we've been working with. It's just that you need a lot of practice analyzing transactions. So I'm giving you plenty of practice in these homework problems. So for transaction A, Joel Polk invested additional cash in the business with a deposit of $35,000 in the business bank account. So I'm going to go to my accounting equation. In this spreadsheet, you have to add an additional step here. They like for you to put a plus or a minus in here so you get full credit of what you're doing with that account. Now my cash is going to be increasing because the owner made an additional investment of $35,000. So my cash is going to be increasing by $35,000. And my capital is also going to be increasing by $35,000. So this time they had you put a little plus sign in front of those to show that both of these items are going up in this case. Then we're going to rebalance just like we've done before. And the balance in my cash account should be $80,000. I'm going to bring down my accounts receivable beginning balance. Bring down your supplies. And bring down your land. Accounts payables brought down. And then we'll add 180,000 plus 35,000 together to get the total capital as of this point. And then check your work. And everything appears to be okay. So we're going and do the next one. The reason I want to go through all of these with you again is to give you more practice, but also because we're going to eventually be preparing a statement that I haven't talked to you about called the cash flow statement. You have to do all this first before you can prepare your financial statements. So just bear with me, class. In B, we paid $50,000 for the purchase of land currently owned by Delight Dry Cleaners as a future building site. All right, so we bought some land and we paid $50,000 for it. So our cash is going to decrease by $50,000. And my land is going to increase by $50,000. And I want you to pay particular attention to what we just did in transaction B. Notice that my cash went down. I had put that in as a minus, but my land went up. Both of these are asset accounts, but what the negative 50,000 and the positive 50,000 does is it cancels itself out. So you can't have two parts to one side of the accounting equation. And this is an example of where this has happened. But every transaction must have at least two parts, like we talked about before. And every transaction, the accounting equation has to balance once you're through with that transaction. So even though my cash went down and my land went up, there was no effect on the total assets or liabilities or owner's equity in this particular problem. So we are in balance now. Then you will rebalance after your account, and notice we subtracted 50,000 from the 80,000, so that's going to leave us with the $30,000 cash balance. We're bringing down the rest of the accounts as they are. And then we're going to subtract, we're going to add the 75,000 and the 50,000 together for the land. And all this is showing is that our land has increased because we bought some more for 125,000. And then I'm going to bring down the rest of these balances. And I'm going to go ahead and check my work. May as well do that so in case we have a problem, we can catch it quickly. All right, we're going to start with our transaction number C. And with C, it says we received cash from cash customers for dry cleaning revenue. It tells us right here that we're receiving cash. So we know that our cash has increased by the amount of $32,125. So under my cash, I'm going to put an increase, and the amount again was $32,125. And it told us in that problem that we received that cash because we had performed some revenue. You see here where it says receive cash from cash customers for dry cleaning revenue. That's a big hint there. That's the revenue account. So we're going to look for dry cleaning revenue. And let's see if I can find it down here. All right, I'm going to do something else here. Let's see if I can minimize this so we can see what we're doing. We need to find the revenue account, which is out to the side here. So let me see if I can figure out how to do this, class. I know there must be an easier way than what I'm getting ready to do. Let's see if I can. Let me see if I can minimize my screen here to about 80%. Let me see if that gives you a little bit more. And anyway, the dry cleaning revenue is right here. You're going to have to make sure you stay on the right line for this. That's the hard part about this and the tricky part about this. We're going to be increasing our revenue by $32,125. And then I'm going to rebalance my transactions because I've added to my cash balance. going to check my work. It looks like we're okay there. And so we're ready to analyze transaction D. So we're going back to transaction D. In transaction D, it says that we paid rent for the month of $6,000. So my cash is going to decrease. Anytime you pay out any money at all, your cash is going to go down. Cash, which is an asset, is decreasing. And you paid for rent, so you need to look for your rent expense account. And again, I don't see it here, class. So there should be a way that you could scroll this over. And I guess it's way down here, but you can scroll it over so you can see what you're doing. And that is really, really aggravating, class. I know it is, but it's just the best I can do with this right now. And so hopefully you won't get too distracted with it. It's very aggravating. And I promise you it'll get better as we go through our chapters. But I really needed to show you, especially the financial statements. I wanted to be able to show you those. And I can't do that unless I am putting in my amounts. And the second part to this transaction, remember we were paying rent, so my rent expense will decrease the amount of my owner's equity, and it's going to decrease it by the amount of the rent that I paid out, which was $6,000. And again, you have to scroll down, find your scroll bar, click on it, and drag it, and you can drag it back to the front part of the screen there. And again, I don't much like it, but it's just the way this problem is set up. And so I'm going to need my calculator, so I'm going to pull it out again. The amount of my cash before this transaction was $62,125. We're going to subtract 6,000 from that, and that'll leave us with a balance in the cash account at $56,125. The main thing is, class, if you continue to practice, you'll get this. Some of you are already feeling better about it, I'm sure. But if you're not quite there yet, don't worry. Just keep practicing. You'll get to everything you need to get to. Really, the first week of class is always the most hectic. And we're just about through the first week or so. But it'll slow down a little bit for you, I hope. But the problem with Accounting 120 is there's just a whole lot of time-consuming work that we do for each one of these problems. So again, I'm going to scroll down to the bottom to where I can see the scroll bar here. I'm going to click and drag on that scroll bar. And I'm going to finish balancing these accounts. Yeah. Let me see where I need to start. Right here at 6,000. See if there's anything else I've left out. Okay, it looks pretty good so far, so let's check our work. And I'm going to grab onto that scroll bar, scroll back, so we can start with transaction E. So transaction E, we are purchasing supplies on account. What we're doing is we're buying supplies, and the amount that we're purchasing is $2,500. So I'm going to go to my supplies account. I'm going to add $2,500 to this. And I bought those on account. And what on account means is I did not pay cash for those supplies. So the only thing I could do is put it on credit. If I put it on credit, my liabilities are increasing. So I'm going to increase my liability by $2,500. And so what we've done in this transaction is we've increased our assets and we've increased our liabilities on the right side of the accounting equation. So the left side equals the right side, and we're in balance after that transaction. Then we're going to rebalance our accounts. And then I'm going to have to scroll down again. Click on your scroll bar and drag it across to see where I was at. Bring down the rest. And I believe that's all of them. All right, I'm going to check my work just to see if we did everything. So far, so good. All right, looks pretty good. So we're going to go on to transaction F. So I'm going to scroll to the top again. Transaction F says that we pay creditors on account $22,800. Our cash is decreasing by $2,800. And it told us that we paid our creditors. So the only creditor equity that we have is the accounts payable here. And we're going to reduce our liabilities. Got to put it in that little block there. We're going to reduce our liabilities by $2,800. And let me double check the amount again. It's $22,800. Woo, that was a big mistake. So let me put it in correctly. $22,800. And let's balance our accounts. So I'm going to pull up my calculator to help me to balance. I'm going to add 22,800 to the 56,125. Now let me try that again. 56,125 plus 22,800. $78,925. We're rebalancing and just bringing down the amounts as they are. And then, okay, I can see that I made an error. Do you see what I did there? We're supposed to subtract this. So let me try this again. Going back to the cash, the balance before this transaction was $56,125. We're going to subtract out $22,800. And that's going to leave me with a balance of $33,325. All right, so my cash went down here again. We subtracted, you should subtract to get the new balance in the cash account. This one stays the same, that one stays the same, this is the same, and then we're going to subtract from our liabilities. The balance before we made this payment was $42,500. I'm going to subtract out $22,800. And that's going to leave me with $19,700. And we're going to bring down $215,000. We're going to bring down the $32,125. And I'm going to go on down till I can see my scroll bar. Scroll over. Move my calculator. I'm going to bring down the 6,000. Yeah, I keep having to move things around there. But as far as I can see, that's the balance there. So I'm going to check my work. And I'm going to scroll over. So far, everything looks good. We're going to go back to the G transaction. I need to analyze that transaction before I can record it. The G transaction says that you charge customers for dry cleaning revenue on account. This is a transaction that sometimes bothers students. So what you're doing is you have worked, so you've earned some money. Your revenue is the amount of the money that you've earned, this dry cleaning revenue. Because you've worked, you have the right to be able to charge your customers. Your customers did not pay you in this transaction. They're going to pay you at a later date. So they have created what is called an account receivable. The reason it's accounts receivable is that's the only thing that would fit here. Anytime you charge a customer for a service, or in this case, dry cleaning revenue, a work that you've performed, you will either receive cash right then, or you can expect to collect from that customer in the future. We can expect that we're going to be receiving cash in the future. So my accounts receivable, which is an asset, is going to be increasing by the amount of revenue, which was $84,750. So I'm going to go to my accounts receivable. I'm going to put in that my assets have increased by the amount that I charged to that customer, or the amount that I billed that customer, if you want to think of it like that. I would have to send them a bill for the revenue of $84,750. So my accounts receivable would go up by $87,750. And again, it must be getting late in the afternoon when I'm doing this, because it's $84,750. Could remember the amount. So let's get the amount right. It's $84,750. My accounts receivable went up. And the only reason my accounts receivable could have gone up is because I've charged a customer, or I sent a bill to a customer for revenue that I have earned in this company. The revenue account will be over underneath the owner's equity somewhere. Here's your revenue account right here. It's going to be in this column down here, but I need to make sure I'm on the correct line. So bear with me, class. The line I should be on is for the G transaction. And so if I follow my G transaction to my revenue, I would put that amount in, follow your G transaction for your revenue, and I'm going to put a plus sign in there, and I'm going to put the amount that I charged those customers, or the amount that I invoiced those customers, which was $84,750. Then you're going to rebalance your transaction. I'm going to add the 93,000 accounts receivable balance that I had at the beginning of the month. I'm going to add to that the $84,750. And that's going to give me accounts receivable at $177,750. Bring down your amounts. And then I'm going to have to combine my revenue account balance before was $32,125. And then I'm going to add to that $84,750. So my new revenue balance is $116,875. Bring down that rent expense from before. And then I'm going to check my work. And then we're going to move on to H. So we'll scroll up to the top. I'm going to look for H. It says that you've received a monthly invoice for dry cleaning expense for July that is going to be paid on August the 10th for $29,500. So in this case, we're the company and we are receiving an invoice from whoever is charging us for that dry cleaning expense. We're not going to pay it until next month. This month is July. And so if we're going to pay it next month, it means that we owe it. So what we've done is we've created a liability for $29,500. That liability that we've created is accounts payable. So I'm going to move to my accounts payable, which is under my liabilities, and I'm going to put in $29,500. My liabilities have increased. The amount that I owe has gone up. And the reason that it's going up is because we're going to be paying for it next month. So we have to create that liability account or increase the liability account here. We also have to have at least two parts. So my other part is going to be to dry cleaning expense. So I'm going to grab a hold of my scroll bar and I'm going to look for dry cleaning expense. And it's right over in here. So I'm going to check to see if I'm on the right line. So bear with me, class. I think we were on H. And so the dry cleaning expense, I'm having trouble seeing. I know you can't see this bar, but I got another bar going on here too. So I'm going to move it out of the way and let me try this again. It's $29,500 was the amount. And it needs to go in the dry cleaning expense. And that happened on transaction H. So I'm going to go to H and I'm going to look for my dry cleaning expense. And I'm going to put in a minus and I'm going to put in the amount. I think it was 29,000. Put that in for just a second so it'll mark my place so I can see where I'm at. It's 29,500. Okay. All right, finally I got it in there. So what we're saying here is that the accounts payable, which is a liability, went up. Remember, accounts payable is a part of your creditor equity, which would show up on the right side of the accounting equation. Because my expenses are going to decrease my owner's equity, which is also on the right side, this kind of washes itself out. This was a plus and this was a minus. So we really had no change in the total of the assets, the liabilities, or the owner's equity in that case. This is a situation in transaction H where we affected only the right side of the accounting equation, but they washed each other out because one was a plus and one was a minus here for the same amount. We're going to rebalance our accounts. And then we've got to combine both of these amounts together. So our liabilities have gone back up to 49,200. And we're ready for I. So for I, it says that we paid the following expenses. Wages expense was $7,500. We also paid truck expense of $2,500. And we paid the utilities expense at $1,300. And we paid a miscellaneous expense at $2,700. That gives me a total of $14,000 that we paid out. So again, what I did is I added my wages expense, my truck expense, utilities expense, miscellaneous expense. All that came up to $14,000. And because I am paying these expenses, my cash is going to be decreasing by $14,000. So in transaction I, I'm going to have a decrease of $14,000. And I have to record each one of those expenses separately. So the first expense in I was wages expense at $7,500. And we were working on transaction I. So my wages expense is going to be minus $7,500 that I'm going to put here. Oops. And then the next expense for I was truck expense, and my truck expense was $2,500. Put in your minus sign, and then 2,500. And we'll scroll back up to the top and look for our next expense, with utilities at $1,300. And then the last part of I said we had miscellaneous expense at $2,700. And then we're going to scroll back over to the front part. I'm going to take out my calculator, and I'm going to take 33,325. That was the balance of my cash account before this transaction. I'm subtracting 14,000 from that. Bring your balances down. We'll check the work. And then we're going to do J. So in J, it says we receive cash from customers on account. It tells us that we are receiving cash. The amount was $88,000. So for J, we're going to put a plus 88,000 to our cash account. And it also stated that we received this cash from our customers that were on account. My accounts receivable is going to decrease in this case. My accounts receivable, which is an asset, is going down by $88,000. So we've received cash, which means we are added to our cash balance, but we've decreased accounts receivable, which means we've subtracted from our accounts receivable balance. Both of these are asset accounts, so they wash each other out. So there's really no change in the total assets, liabilities, and owner's equity, but our balances would change for cash and accounts receivable. So the balance before this in cash was $19,325. I'm going to add to this $88,000. $107,325 is my new balance in my cash account. I've got to subtract $88,000 that I received from my customers on accounts receivable. So some of those customers that you billed have paid you, but some of them still owe you some money. And the amount that they still owe, if I've subtracted right there, is $89,750. Then we bring down our balances. And then I'm going to scroll over again to finish bringing those balances down. And I'm going to check my work. And then I'm going to look for my transaction K. And in K, it says we've determined that the cost of the supplies on hand, that's what we have left over in supplies, is $5,900. Therefore, the cost of supplies used, that means they've become expense, is $3,600. So what we have to do is we have to take from the supplies account balance $3,600. We're going to subtract $3,600 from our supplies. And we're going to put it in the supplies expense account. I'm going to find the supplies expense. Supplies expense account is right here. We're going to go all the way down to K, I believe it was. K. And we're going to put in a minus sign. And I can't remember what it was, so I'm going to put something in here. And then we'll scroll back over and see what it was, and I'll fix it. $3,600 was the amount that the supplies went down. My supplies expense is going to make my owner's equity go down by $3,600. And then we will rebalance the accounts. We'll take 9,500, which was the balance in the supplies account before we took account of those supplies at the end of the period. What we had left over, what was remaining, is 5,900 in the supplies account. The rest of these we're just bringing down. Bring your balances down. And then we're going to check our work and analyze the last transaction. The last transaction is I. And then it's L. We withdrew $12,000 cash for personal use. Anytime you take money out of the business, cash is decreasing by $12,000. And because it says it's personal use, it's going to affect the owner's equity withdrawal account, or the drawing account as it sometimes is called. So my cash is going to be decreasing by $12,000. And my owner's equity is going to be decreasing by the drawing for the drawing is not decreasing, but the owner's equity is decreasing for the $12,000 amount of the withdrawal. I'll double check my amounts. 12,000 is how much we withdrew. So we're going to rebalance the accounts, starting with the cash. Rebalance, bring your balances down. Keep balancing. Check your work. And it looks like everything's okay. So that's a good thing. That's the analyzing the transactions. And now what we're going to do is we're going to prepare financial statements. I really wanted to show you how to do this because before I had a drop-down list I was choosing from, which is different from what you're going to see. First of all, you always start with the income statement. The income statement heading is going to consist of the name of the company, that is the income statement that you're preparing, and notice it has label there. These are hints to tell you what you're looking at here. You're going to look for a label. So what I'm going to do is I'm going to scroll up to where it says labels and account amount descriptions, and I'm going to choose a label to put there. On the income statement, we're going to be preparing it for the month ended July 31st, 2019. I would suggest that you copy and paste these into the boxes. If you don't copy and paste something exactly right, Cengage doesn't like it and it'll mark it wrong. So I'm going to paste it here. Again, it told me that this was a label, so I needed to go and choose the best label for this statement. The income statement is always prepared for a period of time. We're going to measure our revenues and our expenses in this period of time. So on the income statement, you'll always record your revenue first. So this line 1, when we click on it, you see here it says they want an account. That's the signal to you where your choices are coming from. On the income statement, we're going to record our revenue first. And so we want to look at where it says labels and amount descriptions. And let's see, where else does it say? Description. I'm looking for revenue. And it might take you a while to find it, just like it is with me. I know the name of my revenue. It is going to be dry cleaning revenue. Right here's my name of my revenue. So I suppose you could type it in there, but there is a list that you could choose from. And this would be dry cleaning revenue. Let me see if it likes that. So I'm going to check my work. And it's happy with it. So dry cleaning revenue is an account title that I would use for my revenue. The amount of my revenue, this is my cleaning revenue column right here. The ending balance was $116,875. And again, you can check your work as you go. Notice here it's asking for a label, and the labels were given up there on the tabs. This is a label right here. We're going to choose from this list right here. And what we've got is expenses. On your income statement, you're going to record all of your revenue and all of your expenses. Notice that's a heading, and they're looking for the account. The accounts are the titles of each one of these items here. We're going to start with our expenses. So I don't see any expenses here. So what I'm going to do is I'm going to scroll over to where I can see all my expenses, or at least most of them. And the first expense that they have listed is dry cleaning expense, and it was $29,500. Usually our expenses are in order. So dry cleaning expense is going to be the name of my expense account. And I'm going to put that as the amount of $29,500. It's coming from right here, the ending balance. And then I'm going to list my next expense. Notice it's looking for an account. My next expense that's listed is beside a dry cleaning expense is wages expense. And wages expense was $7,500. So I'm keying in wages expense, $7,500. And you can check your work as you go if you want to. Just make sure you're putting in the right items. The next expense account is rent expense, and it was $6,000. The next expense is supplies expense, and it was $3,600. And my next expense is going to be truck expense for $2,500. My next expense was utilities expense for $1,300. And my next expense is miscellaneous expense for $2,700. Next thing it says is you need an account description. What we're going to be doing is totaling all of these expenses. So my account description descriptions are right here. I'm going to look for something like total expenses. And right here it is, close to the bottom. We'll copy and paste that. And then I'm going to use my calculator to add up my expenses. And if I've added them all correctly, it should be 53,100. And so I wanted to check my work just to make sure I got my total added up right. And so far, so good. Now you're going to compare your revenue to your expenses. You can see that your revenue is more than the total of your expenses. So there would be a net income. Notice when I click on this line, it tells me I've got an amount description there. And the amount description that I'm going to look for is my net income. And you could type that in if you wanted to. But if you copy it and paste it, you won't have any spelling errors. And then the difference between our expenses and our revenue would be the amount of our net income. So 63,775 is the amount of the net income that we would have for this particular company. And so this is how you would prepare an income statement. You must prepare your statements in order. So do your income statement first, and then we'll do the statement of owner's equity. Now, the statement of owner's equity is a tough one for students, so bear with me and listen carefully here. Notice they want a label here for the statement of owner's equity. The statement of owner's equity is done for a period of time, just like the income statement was. So you really want for the month ended July 31st, 2019 there. You can type it in, or you can look for your label here. And you can use some of the labels twice. And then check your work. Just make sure you got your right label in there. You can see it's okay. It's got a little green check there. And then on the statement of owner's equity, we always start with our beginning capital first. Notice when I click on that first line, it's asking for an amount description. So I'm going to choose from my list in the amount description, and I'm going to look for the owner's name, which is Joel Park, and choose the beginning amount. The beginning date is July 1st, 2019. And copy this. On that first line there. And the amount of the beginning capital, if you'll remember, we had to determine that in part 1. And so you can get that beginning capital in 2 different places. Right here, we had it recorded as 180,000. And that was because the business had been in business for a while, and the owner's equity from the last period would be brought forward into this period of time. So always start with the beginning owner's equity. Now, in the problems that we've done in the past, we have put a 0 there. To this, we're going to add any additional investments that the owner may have made during this period of time. And again, it's an amount description here. And so we want to make sure that we put exactly what they want us to put in for these descriptions. So it's always a good idea to copy and paste. The very first amount description is additional investment during July. We want to know what the additional investment was for the owner. And so that goes in line 2. And that additional investment is going to come from our transactions. So I'm going to scroll over for just a minute so we can see where we're at. We need to look for the capital account. And you see this was the balance of the capital account, which was 180,000. That came from last period. That's what we had to figure out. But in transaction 1, the owner made an investment of $35,000. So you see here how the capital account has increased. That $35,000 was the additional investment. You could have also got it from your transactions, which tells you right here in transaction A that they made an additional investment, invested an additional amount of cash of $35,000. That's where the amount is coming from. Then we need to think about the other things that will affect owner's equity. Remember, the owner's investments will increase owner's equity, and so will the revenue. Well, the revenue we've already recorded in our income statement. We're not going to write it down again. Our expenses we've also recorded in the income statement up here. No need to write them down again. We've already done that. But what we haven't done is shown that the net income will add to our owner's equity. So for our account description or amount description here, we're going to look for something that says something about net income in it. So here's our amount descriptions. Choose from this list. And there's the net income. And actually, it's really picky here. They want the net income for July. But technically, should be net income. But if you don't put that for July in there, it's going to mark it wrong. So let's make sure we put in the right thing. That's why you copy and paste. The net income amount comes from our income statement, which was $63,705. So we've accounted for the owner's investment. Any revenue and expenses were combined together to get the net amount for net income. The next thing that we know that affects owner's equity is the owner's withdrawal. So again, we're going to look at our amount descriptions. And we're going to look for something that says something like withdrawals. That looks good. Let's choose that. And the amount of the withdrawals was the very last transaction that we worked on, which you can find that in your drawing here, was $12,000. Now I'm going to check my work here because I want to see something here. You see how this turned pink? It didn't like that. And the reason it doesn't like this, class, is you must put a minus sign in front of it to show that it's a negative 12,000. And when you do that, it'll put it in parentheses and it makes it correct. So make sure you put a minus sign in front of this 12,000 so you'll get those parentheses there. So the things that affect owner's equity are the owner's additional investment, the revenue and the expenses were combined together to get the net income, and the owner's withdrawals. These three items would be combined together to determine either an increase in owner's equity or a decrease in owner's equity. You can see here that we had more increases than we did decreases. So this is going to be an increase in owner's equity. Go to your amount description label and find an increase in owner's equity. Copy and paste it. And then we're going to have to find out exactly how much was increased here. So I'm going to bring my calculator out. I'm going to start with 35,000. That was the owner's additional investment. We're going to add that to the net income. Net income is a positive amount. And then we're going to deduct out our withdrawals of 12,000. And that's going to leave us with an increase in our owner's equity at 86,775. I'm going to check my work just to make sure that my math was right. And it is. I combined these three items to get this. Because this is an increase in owner's equity, this increase in owner's equity is going to be added to the beginning capital balance, and that will give you the ending amount of the owner's equity. So I'm going to look at my account descriptions here, and I'm going to look at my capital as of July 31st. I'm going to copy that. And I'm going to paste it here. And then I'm going to combine these two together. Oh, it didn't like it. But anyway, I'm going to combine 180,000 with my calculator amount. And that's going to give me 266,775. Okay, and I don't know why, it's just picky here. Let's see if we can get it to, oh, I know what it was. I didn't pick up my J. So I had the right account, just didn't pick up the right, all of it. So make sure you get the entire thing here that Jay and Joel did not pick up. So let's see if it's happy now. It's really picky, class. Now, let's check our work. And it's okay now. It's happy with what we've done. So that's how you prepare a statement of owner's equity. If the company has been in business for a while, you start with the beginning balance. If they have any additional investments, you combine it with the net income if they have net income, and a withdrawal if they have withdrawal. All this is combined to find the increase in owner's equity. That increase in owner's equity is added to the beginning capital balance. The ending capital balance is $266,775. This balance is going to be put into your next financial statement, which is your balance sheet. And so this owner grew from 180,000 all the way up to an ending balance of 266,775. The next statement is your balance sheet. On your balance sheet, notice there's a label here. The label is for 1 day and 1 day only. So that label would be for July 31st, 2019. It's 1 day and 1 day only. Notice on the balance sheet, it's the only financial statement date that is different. We don't put for the month ended. It's just for one specific day and 1 day only. That is the last day of the accounting period. So all of your assets should be listed, your liabilities, and your ending owner's equity as of this date are what we're going to put down on the balance sheet. Under my assets, I'm going to start with my accounts. My first account on the balance sheet is my cash account. And so I'm going to write down cash. I'm going to key it in. And in the block here that's available, I'm going to put the ending cash balance. The ending cash balance is $95,325. The next asset account that is listed is accounts receivable. Make sure you go all the way to the bottom of accounts receivable and pick up the ending balance at $89,750. And you can check your work as you go just to make sure you're writing in everything right. And then our next asset account is supplies. Go to the bottom and pick up the last balance for supplies was $5,900. Then we have one more asset. I'm having a little trouble here. It's calculating evidently. There we go. One more asset, the land. And the land balance is $125,000. So land goes here at $125,000. That was all of our assets. So we're going to total up our assets. And we're going to write down the total here. So we start with cash of $95,325. I'm going to add to it my $89,750. I'm going to add to that $5,900. and 125,000. $315,975. I'm going to check my work just to make sure I added everything correctly. And it looks okay to me. My next thing that's going to happen is I'm going to write down my liabilities. The only liability that we have is accounts payable. The accounts payable balance was $49,200 at the end of the time period. And again, I forgot what it was, so I'm going to check back up here and look at my accounts payable balance. 49,200. And then I'm going to go to my owner's equity. Now, the account name is just the name of the owner, which was Joel Polk. Joel Polk Capital. You have to put in a comma there for it to take. And the capital at July 31st was $266,775. Check your work. And you can see that you've got the right answer so far. And then on the very last line, we have to put down the amount description, which would be the total of the liabilities plus the owner's equity. You got to write it exactly like it wants. So I'm going to look through my list again. I'm going to look to see if we got anything that says something like total liabilities and owner's equity. I'm going to copy it. And I'm going to paste it right here. And then I'm going to combine the two of these together. And this total of 49,200 plus 266,775. Those two added together should be 315,975. Check your work. You can see here that we've combined both of these together, and the balance equals the total of the assets. That's why we call this a balance sheet. Your total assets have to equal the liabilities plus the owner's equity. And that's your balance sheet. The last statement that you have as a financial statement is the statement of cash flows. And we haven't talked a whole lot about that. And it's a statement that you need to know exists, but don't worry too much about being able to figure out what goes on this particular statement. I want you to concentrate on your income statement, your statement of owner's equity, and balance sheet. You're going to see those over and over again throughout this course. But this is a financial statement, and it will be discussed in a later class. So it's important that we at least talk about it. So I'm going to show you how to prepare this statement. And you must prepare it to be able to get your problem right. And so first of all, it's starting with the label. This is the heading, and the label would be for the date line. This date is for the time period for the month ended July 31st, 2019. You can go up to the top and look for your list of labels. And you have to pick up for the month ended July 31st, 2019. I'm going to copy that. And we're going to paste it as the line in the heading. And I just check my work just to make sure everything is okay. Now on the statement of cash flows, what we're going to be looking at is how our cash came into the business and went out of the business. And we start with the label. This first label is what we call operating activities. Notice it says label here. I'm going to go up to my label here, and I'm going to pick up my cash flows from operating activities. I'm going to copy that, and I'm going to paste it in for line number 1. Your operating activities have to do with how you arrived at net income. So any cash that you would receive from the customer will be entered on these lines under the operating activities. Any expenses that you pay to your creditors or for expenses will also go under operating activities. Operating activities have to do with the operations of the business. It's how you bring your money in versus how you pay your money out. If you'll click on line 2, notice they're looking for an amount description here. And so always when we're talking about cash flows, start with what would add to your cash flows from operating activities, which would be your cash that you receive from your customers or for revenue. So I'm going to look for my best answer here to the amount description. So here's a list of my amount descriptions, and I'm going to look for probably cash receipts from customers. We'll copy that. And I'm going to paste it right here. And I'm going to check my work because we got to have it written just like it wants it. And you can see that it is looking for cash that you receive from your customers. And what I'm going to do is I'm going to click on this amount right here, and I'm going to fill this in. But I can't tell how much I've received from my customers until I look and analyze my cash account. So I'm going to scroll up to the top to look at my cash account. Here's my cash account. I'm going to look at my cash transactions. And you can see I have an increase in cash right here of $35,000. but that was from the owner's investment. That does not go in the operating activities. We're only looking for cash that we've received from customers. It has to be an increase in cash. Here's an increase in cash right here of 88,000. And you see that accounts receivable went down. So that is definitely cash that we would receive from customers. The amount is 88,000. And I'm going to put that in my calculator because I want to check to see what the rest of the cash balances had. I don't see any other, oh, excuse me, there is one that I missed right here. There is another addition to cash at 32,125. And if we look to see what that addition was for, it was for revenue. So that would be added to that 32,125 that our cash went up by right here in transaction C. Our cash went up because we received money from our revenue. This is money that we would receive from our customers. That would be combined with this 88,000 to get a total amount of 120,125. So in our statement of cash flows, the total amount of our cash that we've received from customers is 120,125. I'm going to check my work. And it's the correct amount. So that actually came from 2 transactions where we received cash from our customers. One was a revenue transaction and one had to do with accounts receivable. So this is all the cash increases that we had that were from customers. On the third line, we're going to have to put another amount description. And what we want to put down is something similar to this. We want to show the cash that we paid to our creditors and cash that we paid for expenses. So I'm going to look at my account descriptions and see what the best answer would be there. And right here is cash payments for expenses and to creditors. I'm going to copy and paste that in to my statement of cash flows. And then I'm going to look back at my cash account in my transactions and see which cash payments were for expenses and to my creditors. So I'm examining just my cash account. Make sure I got the whole thing on there. Just my cash account. I'm examining what I've paid out in cash, so it has to be minus signs. And the only thing that I'm going to record is if I've paid out cash for an expense or to a creditor. Notice in this B transaction, I paid for land. That's not an expense. I bought an asset. It's not paid to a creditor. I bought that land for cash. My cash of 50,000 would not go in cash paid for expenses and for creditors. So my next decrease in cash was for 6,000. If I follow the 6,000 all the way over here, I can see eventually that I paid 6,000 for my rent expense. And so I got to move this thing over where I can see what the amount says it was. And it would be for my rent expense. I don't have it quite over far enough. So we'll scroll over a little bit further here. My rent expense, I paid cash of $6,000 for my rent expense. That was in this transaction right here. So I'm going to clear my calculator. This is the first expense that I paid cash with. It was for the rent of $6,000. Now remember, you are looking at your cash account. You paid cash in the amount of $6,000 for your rent expense. You also paid out $22,800, but that was to a creditor. And so that is included with the $6,000 expense. I'm going to add my $22,800 amount. My next account that decreased, my cash account, had to do with a decrease of $14,000 in cash. And that transaction was for the I transaction, and that $14,000 decrease for the I transaction was all of these expenses here. So each one of these expenses, all combined, was a decrease in our cash of $14,000. So I'm going to add that to the previous rent expense amount. And then I have one more decrease to cash, which was for the owner's withdrawals. And that is not going to go into this category. So I'm going to total up everything that I've got so far as a decrease to my cash for the payment of my expenses and to the creditors. The amount is going to be $42,800. And I'm going to check my work just to make sure that I've got everything included. And unfortunately, it didn't like that. So let me try this one more time. And it might be simpler, class, if we just looked at the transactions here. We want cash that we paid for expenses, and that was not transaction B because we were buying land. We paid rent, so we took $6,000, and we're going to combine it with what we paid to our creditors of $22,800, plus we had we paid these wages, which the total of that was $12,000. So I'm going to add that. And that total is $40,800. And so let me put this in as 40,800. And I'm going to check my work again. And it's still wrong. Okay. Well, sometimes it's all by trial and error, isn't it? So we'll try it again. So let's see. We had a decrease in cash here which was not affected in that transaction. 6,000 is definitely a payment for rent expense. $22,800 was a payment to our creditors. Then we paid out $14,000 for all of those automobile expenses. So the amount should have been what we had to start with. I know what's wrong now, class. You're going to laugh. Yeah, I put a minus sign in front of it. 42,800. See, sometimes even your instructor can get thrown off. So you combine all of those together, but remember they were cash payments for expenses and payments only to your creditors. Now, you're going to net these amounts out to get the net cash flow from operating activities. So I'm going to look at my account descriptions and I'm going to get my net cash flow for operating activities. And they made it tricky on you. They give you two of them. They got one here that says used and they got one here that says from operating activities. And the only way you can tell which one it is to look at your additions. Do you see that your cash at your receipt is more than what you paid out for your operating activities? So this is a net cash flow from operating activities. So it's net cash flow from operating activities. We're going to copy that. And we're going to paste it. And then I'm going to just check my work just to make sure that I've got the right account title there. And they're happy with that. And now I want to put my amount in there. And what I'm going to do is I'm going to net these two out. So I'm going to take 120,125. I'm going to subtract from it 42,800. And what that will give you is an amount of 77,325. Check your work, and then we'll go on to the next type of activity that would show up on the statement of cash flows. The next activity is going to do with the what we call the operating, not the operating, but the cash flows from your investing activities. Notice this says label here. So we're going to go up to the top. We're going to pick up our label. And this would be cash flow. Oops, not that. That's not right. We're going to have to pick up our label and it's going to say investing activities, something like that. I'm looking for it, class, and I don't see it. So I'm going to try to type it in and see if that'll let me do this. Cash from flows, FLOWS, from investing activities. Guess what? It took it. The amount description then that's going to go in here is only for the cash that flows from the investing activities. And the only investing activity that we had is going to be our investment in our plant assets. And y'all don't know what plant assets are yet, but you will at some point in time. But do you see here where we use some cash of $50,000? That's a decrease there. And we used it to buy our land. And so that's what goes in this middle section on the statement of cash flows. It would be something like cash used for payment of land. Again, it's got an amount description here. So let me see if we can find something pretty close to that. And so the only thing that I can find here is the net cash that would be used for investing activities. Let me see if that'll make that happy there. I'm waiting for it to see if it's all right. It doesn't like either one of those now. Okay. And what we did is we bought land for $50,000. It's okay with that, but it doesn't like what we've called it here. So let me pull this out of here. So let me see what they wanted. An amount description. I'm still searching for it. All right, right here's what it's wanting. Cash payment for the purchase of land. Okay, it likes that. But I think it might need to go on this line here. So cash payment for purchase of land. I'm gonna cut this and I'm gonna paste it right here. And I'll put a minus. And then this would have to be the net cash flow from your investing activities. Or net cash used for investing activities. Now, still didn't like that. Well, I'll tell you what, I'm gonna move on and I'm gonna come back to it in a minute. This next part has to do with another label. And there's the third part of a statement of cash flows. And that third part of the statement of cash flows is considered to be your financing activities. The financing activities are the cash that you would receive from your owner would go in this section versus the cash that you have withdrawn for the owner as a drawing. It too would go in this section. They're looking for a label here. And so I'm going to write down that it is the cash flows from financing activities. We'll copy that. And I'm going to paste that in the label right here. So I'm thinking that this red one here should be something like cash flows from investing activities. So let me try it one more time, but we'll continue on till I get this straightened out for you. See if it'll go here. Okay, evidently I had them backwards here. So this one would have been the cash that was paid for the purchase of the land. B. Put it right there. Well, finally it's happy. And the third section is cash flows from financing activities. And what we're going to list first is the cash that we would have received from our owner as an investment. Notice it's saying to choose an amount description. And the cash receipt for the owner's investment is what I would choose to go there. And the amount of that cash that we received from the owner's investment came from transaction A. It was $35,000. And then we're going to show the cash that we pay out for the owner's withdrawals. Cash withdrawal by the owner. And the amount of that withdrawal was $12,000. It came from the last transaction. And that would have decreased your cash account. So you need to make sure you put in a minus sign and 12,000 there. And then you're going to net these out. And you can see here that the withdrawal was less than what you received by the owner's investment. So it would be a net cash flow from the financing activities. So we would look for the account title exactly as they want it. It would be the net cash flow from financing activities. And the difference between these two is my net amount that I would record. So 35,000 minus 12,000 is 23,000. I'm gonna check my work. And then we'll move to line 11. There are three parts to the statement of cash flows. The first section is the cash flows from operating activities. The second section is cash flows from investing activities. The third section is your cash flows from financing activities. You're going to combine each one of these net amounts together to determine whether there was an overall increase or decrease in cash. Do you see that my positive amounts here are larger than my negative amount? I'm going to combine all of those together. So this was my positive, 77,325. Plus my other positive net cash flow, which was 23,000. Then I'm going to subtract out my negative net cash flow that I paid for my land. And that will equal 50,325. This is a positive amount here. So this part right here has to be an increase in cash for that time period. And let me try this and see if this will work. Net increase in cash. The net increase in cash is 50,325. Again, I combined my net cash flow from operating activities with my net cash flow from investing activities and my net cash flow from financing activities. All of these combined equal a positive amount, which is an increase in cash during July. The next line we're going to pick up is our beginning cash balance. So I'm going to put down exactly what they tell us to put down here. Your cash balance at July 1st is my beginning cash balance. And that beginning cash balance was given to us at $45,000. My beginning cash balance was $45,000. I'm going to combine that 45,000 with the 50,325. I'm going to add them together. And that's going to give me 95,325, which is my ending cash balance. So my cash balance at the end is 95,325. You can check to see that this balance balances up with what you have written on your balance sheet. So our balance sheet cash amount equals our ending cash balance here. So you'll know that you've done these right. What this statement does is it tells management how they spent their cash and how they brought cash in for this business. So I know this was a really long recording, class. I'm hoping everything went well on the recording of this. Don't worry too much about this statement of cash flow, but concentrate on these three financial statements: the income statement, the statement of owner's equity, and the balance sheet, because you're going to hear about them again and again and again in this class. Also, make sure that you know how to analyze transactions through your accounting equation. And so I'm going to stop sharing, and we'll see you next time. Bye-bye.